Let's bring in our panel to discuss consumer sentiment and the state of it. Joining us now, we've got Joanne, Director of the Surveys of Consumer at the University of Michigan, and John Lonski, President of the Lonski Group and former Chief Economist of Moody's Investor Services. Thank you both so much for joining us today. All right, Joanne, we got your latest numbers. This is obviously the preliminary reading, but we don't typically see too much divergence from the preliminary to the final reading that we get later this month. We saw this big drop to 50.8. In this latest reading, second lowest level on record. How should we interpret this?
So the fall that we saw this month actually wasn't all that much lower than it was last month, which was already a very, very low reading. So I would interpret this as essentially unchanged from April. That follows consecutive months of very, very steep decline. So overall, over the course of 2025, consumers across the board, across demographic groups, across the political spectrum, all agree that the outlook for the economy has soured, and indeed May was no different.
Okay, and then, John, I want to get your perspective. When you heard the numbers, did that kind of line up with what you were expecting?
It was close to expectations. We have to realize that the survey was taken, I believe, prior to Monday's announcement of a pause with the tariff battle that we now have with China. And that, provided quite a lift to the markets, along with Donald Trump's successful trip to the Middle East as far as securing new deals for U.S. businesses goes. So, this jump by the equity market over the past week, nearly 5%, perhaps provided a slight lift to consumer sentiment. My view is the problem with consumer sentiment is that the cost of living remains elevated. Sure, the rate of inflation is going down, but that only means that prices are growing more slowly, and consumers, many consumers, middle income and lower income consumers, are burdened by the high cost of living. And moreover, first-time home buyers have an absolute nightmare when they look at the unaffordability of housing.
Okay. And then, Joanne, I want to ask you this, because sometimes in the surveys that you all do, there's this divergence between Republicans and Democrats. You had seen more of a convergence recently in terms of views and expectations, inflation expectations ratcheting up. How did they look across the spectrum, whether we're talking about Republicans or Democrats? Were there some similarities, or were there differences?
So we've been seeing partisan differences in sentiment and expectations going back at least to the Reagan administration. So in that sense, it's really not new. And typically, Democrats, independents, and Republicans are all moving in parallel, aside from the transition period between an election and an inauguration. And the last few months actually have been continuing that trend. We saw a particularly large jump in inflation expectations that was largely driven by Republicans this month. But across the board, Democrats, independents, and Republicans all see inflation expectations as getting worse over the course of 2025.
And then, John, I want to ask you this. So now you're seeing, I guess, more of a parallel track. But you made a great point that the survey was done before we got this news. I think all of us were surprised by how fast that happened, that temporary trade truce between the U.S. and China. And we know coming up in this survey, tariffs came up. And that's a big worry for consumers and what that means for inflation. Given that there's been a big change since this survey was done, what's your view about how this can play out in terms of consumers' actual actions?
I'm worried because even though consumer spending continues to grow at a decent pace, consumer sentiment is low. Consumers are worried, they're troubled, they're anxious about the future. And what I'm concerned about is that with the imposition of tariffs, we may get a temporary increase by price inflation, an increase in prices once again. You can't get away from that. And it could be this forthcoming tariff-induced increase by prices finally leads to this long-anticipated material slowdown by consumer spending. Not out of the woods yet, though. This past week, the equity market feels more confident about the future as far as consumer spending is concerned.
Okay.
If
All right,
I may
well,
jump
look,
in
to be
for a
fair,
moment.
yes, I was going to say, Joanne, I did want to get your final thought here. We've got less than a minute yet. What's your final thought here, Joanne?
We did see a little bit, 2 days of reaction after the China tariff announcement, and it was a little bit of an improvement, but not enough to offset the overall downward trend. The big worry that I see here right now is that consumers are really worried about their incomes and labor markets. And as a result, the key thing that had been supporting consumer spending over the last couple of years seems to be eroding away.
Okay, some worries there. The job market still holding up, but retail sales did slow this most recent report, rising just 0.1% in April. So there is certainly some headwinds there. That's Joanne Shu, the Director of Surveys of Consumer, University of Michigan, and John Lonski, President of the Lonski Group and former Chief Economist of Moody's. Thank you both.